We begin with the banking turmoil and new details about Silicon Valley Bank. ABC News obtaining new audio of then CEO Greg Becker downplaying financial risks just days before the bank collapse, the second biggest bank failure in U.S. history. Financial filings showing Becker sold $3.6 million in Silicon Valley Bank stock late last month. Sources confirming to ABC News that the Justice Department and the FBI are investigating the bank's collapse, allegedly focusing on possible insider trading. Public filings also showing that the executive chairman of First Republic Bank, Jim Herbert, sold more than $4 million in bank stock in January and February of this year. And reports tonight of a major financial merger overseas. UBS in talks to take over parts or all of Credit Suisse. Swiss authorities are working to broker a deal that could reportedly be finalized as soon as this weekend. It's part of an intense international effort to restore trust in the banking system. ABC's Elizabeth Schulze leading us off from the White House.
Tonight, amid a growing banking crisis, newly obtained audio by ABC News reveals the CEO of failed Silicon Valley Bank projecting confidence in the company's outlook just days before its dramatic collapse. At a conference on March 7th, Greg Becker downplaying financial risks.
If you think about the Fed, what they want to do is making sure they're kind of managing kind of all financial risk, right? And so much of that risk has gone outside of the banking sector.
But 3 days later, the bank collapsed, and government filings show Becker.
Now, I just heard that audio. It does look like to me that he's downplaying the situation. But it's unfortunate that he sold those shares that's worth $4 billion and then some days or even weeks before the news came out that the bank was going under. He should definitely face some criminal charges because of that, and to make some of the people whole.
Sold $3.6 million in Silicon Valley Bank stock back in February. His lawyer telling ABC News, "We believe Mr. Becker conducted himself appropriately at all times." Sources confirming to ABC News the Justice Department and FBI are investigating Silicon Valley Bank's collapse, with part of the FBI's early focus expected to be on any evidence of insider trading. Public filings also show Jim Herbert, the executive chairman of embattled regional bank First Republic, sold nearly $4.5 million in stock in January and February this year.
All these people getting their money out before everybody else loses their money, right? So as Elizabeth Warren was saying that, these things need to be clawed back because, it's not good for the investors that these guys here who are executive leadership, that they're selling these stocks days before a certain stock goes down. And, they know ahead of time where the stock is going. They just have not made it public. But they choose to engage in possibly insider trading to sell whatever they had to do.
Here, President Biden is now pushing for executives of failed banks to face higher punishments, including clawbacks and fines.
We must get the full accounting of what happened and why those responsible can be held accountable.
And tonight, another struggling bank, Credit Suisse, is reportedly in talks to merge with UBS. The buyout would come after a $50 billion cash injection from Swiss authorities into Credit Suisse last week, as regulators in the U.S. race to contain fears of a global banking crisis.
Elizabeth Schulze joining us from the White House. And Elizabeth, back here in the U.S., as the focus intensifies on those banking executives, what is President Biden suggesting to hold them accountable?
The president says stock sales and bonuses should be a key target from regulators for any of those executives of failed banks if wrong.
Yeah, absolutely, because you have to make your sales of a particular stock public. So therefore, they're going to be a target by the lawyers because it provides valuable information onto possibly what they were thinking about before they sold these things. And I'm sure they knew that the bank was facing hard times, and that's why they sold some of their assets in order to get some money. And even at a loss, they sold some.
wrongdoing is found. The president is also calling on Congress to expand the authority of the FDIC to impose fines and to prevent those executives from working in the industry in the future. And tonight we are hearing from a spokesperson for Jim Herbert, the executive chairman of First Republic Bank, who says that those stock sales were part of estate planning and philanthropy.
Yeah, right. Of course, they're going to try to say that. That's what lawyers do, right? They try to get their client out of trouble. But, you know, truth be told, when Congress calls them to the hearing or whatever hearing it's going to be, those monies need to be clawed back, right? So it's not fair for the other individuals who didn't have access to this insider knowledge so they could act on the stock going down. But they should be held accountable for it, and I wouldn't be surprised if they are.
We're all concerned about what happened at Silicon Valley, and we're looking at other banks around the country. And I think our hope and our prayer is that there is not going to be contagion. And I think it's imperative that the Congress act and act soon in a number of areas. And I think the first point that has to be made, you know, Anderson, I went through the 2009 financial crisis. And I would say that I have not experienced in my political life a moment in which the American people were more outraged at what was happening in the country than at that time. What they saw is huge financial institutions run by the masters of the universe, these billionaire-type guys engaging in fraud, destroying the banking system, getting bailed out, creating an economic situation where millions of people lost their homes, their life savings, their jobs. And nothing happened to these crooks. And the American people looked at Washington and they said, you know, this is wrong. We can't have two systems of justice for everybody except for the people on top. So bottom line here is I agree with President Biden, is that whatever happens in the future, if to the degree that there are any bailouts, it must not be, it cannot be, that working families and the middle class bail out the masters of the universe. They're going to have to figure out a way on Wall Street and within our financial system that they pay for the bailout, not ordinary people.
The Justice Department and the SEC both announced investigations into the SVB collapse. Where do you think accountability lies here?
Well, again, it's hard to say, and you know, they're looking at the facts, but I would say it is a little bit troubling that literally a day before this bank collapsed, they were busy giving out bonuses.
Yeah, that is crazy, right? But they knew the bank was going to collapse in the first place, and they're going to engage in these bonuses to their executives, and that's not right. That's not fair to the people. That's not fair to the organization at all, because you know it's just not fair to them that they're giving these things out of there, knowing that a few days later that this bank was going to collapse.
And that some of the leadership in that bank sold a lot of shares in the recent past. So that's something for the FBI, the Justice Department, to take a look at. The other point that I would make is back in 2018, the banking industry wanted a major reform in the Dodd-Frank bill, which came about after the 2008 crash. And what they wanted was to remove many, many banks who were being under strong supervision, because the level at that point was $50 billion. Any bank over $50 billion would be under stress tests and strong supervision to make sure that we didn't have another crisis. And what the banking folks came in and they said, no, that's too onerous. It's costing us too much money to have to go through all these regulatory processes. Let's raise that level to $250 billion, meaning only the very, very largest banks. And the irony of this whole thing is the Silicon Valley Bank, the leader of that, Mr. Becker, came here to Washington to lobby to remove himself, his bank, from this kind of supervision. So you have the absurdity of them wanting to get out of supervision, and then a number of years later, they're coming before Congress asking to get bailed out.
You know, that's unfortunate, right? For Mr. Becker there, for coming on and lobbying against these regulations that was set in place in order to prevent another crisis like we had in 2008. But for his bank to go down, he should face criminal charges for that, and I think he will face criminal charges for that because it's just not fair to anyone, right? As you've heard repeatedly, there cannot be two law systems or whatever, one for the rich and then one for the common people, right? The rich or whomever is not above the law, and everyone should be treated equally when it comes to those situations.